As you may remember, we've recently brought 4 new analysts onto our investing team here at The Motley Fool, and we wanted to take the opportunity here on Industry Focus and Between Two Fools to introduce you to them. In our 4th and final installment of our analyst interviews, I had the good fortune of speaking with Ari Hughes. I hope you enjoy our conversation. Okay, Ari, first things first here. Tell our members, tell our listeners out there, who are you and how did you get here to The Motley Fool?
Sure. Thank you for having me, by the way. So I'm originally from Northern Virginia. I grew up not too far out of the headquarters of the Motley Fool in Northern Virginia, the Fairfax area. And I've always just kind of had a passion and interest in business. In high school, I used to do like a lot of marketing competitions and things like that, where you'd come up with proposals. And I really thought for the first portion of my life I was going to be like a marketing executive or like a brand manager somewhere.
Well, we do have a marketing business here if it's interesting to you.
Yeah, and then but I always finance was my first love. I always was interested in being like a stockbroker. And then what happened was I was entering college as the recession hit, and I said,
"Ouch."
Okay, yeah, I'm going to do marketing, but I want something a little bit more kind of technical, or like I think maybe a little bit certain in this economy. So I thought, okay, maybe I'll do finance. So double majored in finance and marketing, and then started off as a financial analyst for a local government contractor. And while I was in college, I just really got interested in the markets, and I took, the little income I had from my part-time job, and I would start looking at shares and things I'd, like to own and research, and that just kind of bloomed, and then it grew and grew. And last year I finally said, I really want to be an equity research analyst. I don't know how I'm going to do it, but I made that my goal. And then I put together a report, started going around, interviewing, and then I discovered the Motley Fool, and the rest is kind of history.
Well, I can tell you, as a part of your interview and coming here, one of the things that struck us was your passion for investing. That Apple stock pitch that you brought to us, speaking with you, it was very clear that you were doing something you really enjoyed doing. And that was ultimately one thing that made us feel really good about having you come here and join us. Because really, investing is all about that passion and wanting to dig into it every day. Now, speaking of investing, we like to talk about value investing and growth investing and dividend investing and all that stuff. Identifying what kind of investor you are, I think, is always a bit of an interesting exercise. When I started here almost 10 years ago, I wasn't even really sure what kind of investor I was. What kind of investor are you? Do you know? Are you still in that process of discovering that, or do you have a strong feeling there?
Yeah, so I think I'd identify myself as probably a combination of value and GARP. Essentially, I'm interested in businesses that generate like some type of free cash flow. Yeah. That's really important to me because, I think about business from a practical standpoint. Like if I owned a private business, I'd want something that generates cash. You have like a lot of high growth companies that maybe aren't cash flow positive. So those are just kind of the businesses I prefer.
Yeah, GARP, I can relate to that. I think, and for listeners who aren't familiar with that, that's growth at a reasonable price. I like that one. I've always kind of considered myself a motley investor. I'll go anywhere where I feel like the opportunity is, but I think I probably fit mostly into that GARP category. Since you've been here, and it's not been all that long, and you're still going through our investor development program, but what's something you've learned here in your time here so far? What's something you've learned in regard to investing that surprised you, or something that you weren't actually expecting?
Sure. So one of the things I really valued out of the analyst development program that wasn't a part of my process before was this whole idea of looking at proxy statements to see how management is incentivized. So I used to read kind of the 10K, which is the document that describes the business in general and gives you the financials. But it's really important to understand that as management incentivized to make the business more profitable to generate free cash flow. So is your CEO going to get bonuses or incentives based on making the business more efficient or more profitable? So those are really important things to me now that kind of translate into, I think, higher stock prices, especially for most businesses that I really valuable. That just I really value it now, but wasn't a part of my process before coming here.
Yeah, I think that makes a lot of sense. You can see in some of those proxies where if incentive is based on earnings per share, you and I know they can manipulate that earnings number in different ways.
Yeah.
But if it's based on something like operating income, I mean, that's a number, right? That you can't really fudge that so much.
Exactly.
So yeah, that's a great point there. What is the best piece of investing advice you've ever gotten in all of your years up to this point? Anything stand out?
Yeah, sure. I think the best piece of advice kind of falls in line with, I think, a lot of the Buffett mantras where, the idea of would you buy the entire business?
Oh, yeah.
If I'm looking at any company, I kind of start with that question. I don't think about it as, just a stock. Is this a business I would be willing to own, if the market shut down for 10 years?
Yep.
Things like that is kind of where I start. And I think that also dictates your risk tolerance.
Sure.
So, it also determines, how comfortable are you with this type of business? So that's where I start is would I own this business in real life or, if in a private setting? Is kind of the starting question for me. I think that's really important.
We talk to a lot of investors all the time, members and listeners and prospects and people who are asking questions. In that whole idea of business-focused investing, that's what that is. View yourself as an owner. Would you want to own that business? That'll help you make that decision, I think, pretty quickly. Because some of them you would be happy to own. Some of them you're like, I don't want to own that thing.
I think also the other thing is too is you really have to. Do you understand the business as well?
Yeah, that's a good
I think
point.
that's going to be another thing that comes out of that. Can you have a conversation about how it makes money? What things in the environment affect that as well. That's
one of those questions you can ask sometimes. Be like, how does this company make money? It seems like such an obvious one, but in some cases, it's not such an obvious answer.
Right.
But that is really a great starting point to figure out exactly what that business is, and if it's even something you understand or want to get mixed up in. That's good. Okay, so going away from investing for a second, talking about Ari the person, what's something that has happened to you in your life? Something interesting, something unique, something you feel like our listeners should know about you?
Sure. So I'm an avid snowboarder.
Yeah.
I really enjoy snowboarding a lot. I haven't done it as much recently, but once I was in Vermont and I got caught in a snowstorm while I was snowboarding. I had to wait it out until I could get back to the lodge. It was a scary experience.
How long did that take?
Maybe 30 minutes. The wind was blowing and I had to go behind a shed and just kind of wait it out until I could make it back down to the lodge. But it was pretty scary.
I can imagine. Now, I heard a rumor that you're a pretty good ping pong player too. Is that right? Did you lay the hammer down on Buck Hartzell? True or false?
So I don't know.
Recorded. It's going out there.
So to Buck has a ping pong table in his house.
I know.
And we were talking before the match. He's like, "Oh, I have to find my paddle," and I was like, "Oh gosh, this guy has his own equipment." So that made me really worried. But I think it was his partner that wasn't as good. So I think if he had a partner that matched his skill set, I think he would have won. In all fairness, so if we make it through the next round, then I could probably start to say we're a good team. but I think his partner held him back more so than my skills of being a ping pong player.
Well, I don't play a lot of ping pong. I play more tennis and golf. But I tell you, my first time ever coming here, the day I came here for my interview, I came in here, the place was like a ghost town, and I came to find that the reason why was because it was the office ping pong tournament, and everybody was over in the game room playing ping pong, and I thought, oh my God, I got to get a job here. Thankfully, it all worked out.
Yeah.
Okay, great. Well, normally we like to wrap these interviews up with getting a book recommendation for our interviews, and in this case, because you are who you are and you do what you do, I thought it'd be great if you could give our listeners an idea of a stock that you really like today and why. So tell the listeners out there, what's one stock on your radar today and why do you like it?
Sure. So the stock on my radar I'm really interested in is a company called Intuit, ticker symbol INTU.
Yeah.
Intuit is the creator of TurboTax, and I think this is a great business, but just because of the need to do taxes every year.
Yep.
So it makes for a great reoccurring revenue for the business itself. And they're the leader in the do-it-yourself market for tax preparation. The software is easy to use. It guides you through the process. It's very sticky, so you have users coming back to it every year. And the culture, they're always adding things to the product. It's really disruptive, and they're always bringing new, kind of additions to their products. They also own QuickBooks, which is the leading small business software for accounting. It has 80% of the market share. And they've also kind of updated these products for the gig economy. And that's people that drive Uber, Lyft.
Yeah.
So there's been a big need there to understand the kind of accounting in that contractor realm there. The software lets you send invoices, which is really advantageous for, small business owners and things of that nature. So it's just one I like a lot. The only thing I'm a little uncomfortable with is the valuation at these levels, but it's a very, I think, attractive company that'll be around for years to come.
Yeah, I think valuations are a little scary all the way around here. So it's
Sure.
you gotta be a little bit picky these days. But Intuit, I like it. I've used TurboTax myself, and you know what they say: death and taxes, right?
Yeah.
All right. Well, Ari, thanks so much for taking the time to stop by today. I know our listeners got a great thrill out of meeting you, and I'm sure we'll be seeing more of you in the near future.
All right. Thank you, Jason.